Amid slowly recovering global growth and demand, Asian economies are expected to see reasonable growth in 2017, with not too many facing inflation risks, given it is currently either at the bottom or below the central bank lower bound. Most Asian central banks to be on hold, with a few still in an accommodative mode, like Indonesia and India.
Heading into 2017, we may see some changes of catalysts for Asian credit. The new political events and macro development trend will be the key driver for U.S. Treasury, which will continue to dictate the Asian credit bond yield movement, while credit spread will pretty much depend on the default trend.
Across the region, we continue to see the reform agenda unfolding. And the reform agenda is very important in Asia. We've seen big reforms in India. We've begun to see reforms unfolding in Indonesia, and what we want is to continue to see those unfolding regardless of the political environment. We also expect China to remain in stimulative mode and to continue to provide fiscal and monetary support to keep the economy growing at or around current rates. Now, if that happens, that's a very good environment for equities globally and particularly in Asia.
Political developments, both globally and locally, will likely remain important for Asian markets and have the potential to cause bouts of volatility from time to time. Developments in China and commodity prices are also important factors. Stability in China could provide a positive anchor for Asian assets.
The three low factors driving the Asian bond market, that is low growth, low inflation, and low rate of return. Therefore, a focus on income has been the preferred choice of strategy. Technical factors are still a key driver of spreads in Asia, which remain favorable. Given Asia's large contribution to the world's GDP, there continues to be a broad underrepresentation of Asia in global bond indexes. Growing investor demand could help drive the spread tighter.
Upside earnings surprise will be the key catalyst for Asian markets in 2017. Economic recovery on the back of rising global demand will boost corporate sales growth trajectory. Supply-side discipline and improved operating efficiencies give us great comfort that rising demand will translate into better corporate profitability. In terms of investments, we like investment themes related to consumption, technology, and global reflation.
One of the advantages that we have here in Asia is that valuations are very cheap relative to the level of profitability of equities in the region, perhaps the most attractive on that sort of trade-off around the world. That means that without earnings improving, we can expect to see the multiple expanding, or to put it another way, we can see a compression of the risk premium and drive returns that way. But if we do get a boost from earnings, then that could be very, very positive for Asian markets.